Welcome to My Divorce Real Estate. I'm Amber Gifford, and this is my husband and teammate, Scotty Gifford.
Hello, hello.
What are we talking about today?
So today we're talking about doing some credit scores and home buying, and at this time, the market we're seeing right now, we have seen a little bit of that enthusiasm kind of drop off in the market, which we actually think is going to be a great time to buy because homes have been sitting just a little bit longer. Sellers aren't, maybe they're a little bit more willing to come down on price just a little bit because they realize that they're just not getting multiple offers day one anymore.
They're willing to accept contingencies again.
Yeah, contingent offers coming back. No more appraisal waivers, back to contingencies.
Yeah.
Nice shift in the market there. So we thought we'd talk a little bit about, hey, what if we are considering being a new home buyer, what do we need to look at as far as our credit scores and that home buying process?
What you need to know. Scotty's really the expert on this. He's a mortgage loan originator, so he is going to do most of the talking, but credit is very important, right? I mean, like nobody tells you as a kid, like, don't do this and do this. So credit is everything when it comes to home buying and establishing the next step for your future. Yeah,
and we do believe in having ownership is a great way to build wealth in America. We did a video and we have a blog article talking about how homeowners have 40 times the net worth of renters. So in the long term, we believe that you should, be moving towards home ownership if that's your goal. So
interest rates are high.
Well, they're high, but everybody's like, they're high compared to what they were the last 2 years. But from a 30-year perspective, they're still really low.
Right.
I mean, right now, we're in the fives. The Fed's talking about raising rates again. But overall, I mean, it's still a great time to buy. Yes, home prices are up a little bit. But
so they're higher than what people would want. And so to get the best rates when you're purchasing a home, your credit score needs to be above 720?
720 is ideal, right? If if you're 750, 720 range, you're going to get probably the best rates around. And so while we're talking about rates, like where are those credit ratings coming from? Are they coming from Credit Karma?
So you mentioned Credit Karma and that we shouldn't be getting our scores from there, which we hear that a lot. Where are we supposed to get them from?
Well, so when you do go apply for the mortgage, any loan officer is going to pull your credit from all three credit agencies, which is going to be Transunion, Experian, and Equifax, yeah. And so what they're going to do is they're not just going to pull one of those and go, okay, that's your score. They're going to pull all three of them, right? And say your score is, 600 on one, 610 on another, and 700 on the last one. Where they're going to take the middle one, and they're not taking an average, which some people think. They're taking the middle score, so it's going to be that 610 score that they're looking at as the middle one. So, and so that's why you can't just assume that you know what your credit score is and what they're going to look at. So.
I know for a fact on Credit Karma, everyone who's ever come to me says, "Oh, I looked here," and I had, before you were even a loan officer talking to them, they were like, "Oh, it's always like 30 points off." 30 points is huge.
Yeah, and that can make a difference.
When you're in like 715.
Yeah, and that can make a difference because if you want to be closer to that 720 or above, right? And if you think you're at 720 and now 30 points down, you're at 690. So that might affect your, what loans you're kind of looking at and qualifying for. So, and those rates do update, daily sometimes too. So
a lot of banks also offer, and you get your free credit report once a year too. That's
annualcreditreport.com.
Yeah, and my bank offers it as well. You can always log on so you can get your free one and check out what's going on too.
I'll put it down in the link.
I'll just ask that. So I have a question. What if you got a divorce and your credit was kind of ruined and you only have a score of 580? Can you buy a house?
Yeah, there's certain loan programs out there that you can still get qualified for a 580 credit score. I mean, FHA, 580, depending on your debt to income ratios. Yeah, you can still get qualified.
Well, that's good to know because credit's important.
Yeah.
So what about a conventional? Like, what do you need? Do you have to put down 20%?
No, 20% is not going to be required to get, a house. I know a lot of times people think that, they heard it, oh, I got to have 20% down or I'm not going to get, I just won't be able to get into a home. But really, 20% down, all that's going to really do is you might get a little bit better, a credit interest rate. But really, you're just going to have what's called private mortgage insurance, right?
PMI.
And that's going to add, it's
$200 to your payment?
Well, it depends on the price point, right? But it's going to be,
$1 million.
No, it's not going to add $1 million. It's probably going to be $100 to $200 a month extra to your mortgage payment. So that's one of those things that we can look at too when you're coming to us and saying, well, what do I qualify for based on your income and based on your debts? It's going to be a debt to income ratio discussion that we're talking about along with the credit score. So,
and what about FHA?
FHA, so that's a really great loan program. They only require 3.5% down versus a conventional, which is as low as 5% down for conventional. Because conventional, you can do the 5-10%. You can do 20% if you want. But I do believe in the power of getting into real estate sooner rather than later and waiting, because we do know that homes do appreciate on average 3 to 5% a year. And then if you were going to buy in 2020 and you waited, well, you missed out on like $100,000 appreciation because you waited around trying to save up an extra 15%.
So the goal is really to find a loan officer who can shop those rates, shop the loan programs for you, see what your credit score is. Don't go to them going, well, I saw on Credit Karma, blah, blah, blah. Yeah, no.
Yeah, so we're going to have to pull your credit and look at everything and look at all your debts. And so then we can have that true discussion. And you might have different, criteria you're searching for or looking at, but we can really help you based on where you're at, help you guide you towards the correct loan program. Or
yeah, I hear this all the time too. Oh, I don't want to fill out an application because it's going to mess up my credit score. Is that true or false?
Well, there'll be a small ding on your credit, but you're allowed to shop for your mortgage. It's not going to be this big hit on your credit. We're talking 6 points here.
They're trying to buy a house. I can clearly see that. It's not like you're going to go.
Yeah, it's not like opening up. You bought a new car and now you're utilizing more of your debt, right? It's just a pull on your credit. And I don't know if you know this or not, but credit cards pull your credit almost every month anyways too. So if you're shopping for a mortgage, you're allowed to shop around if you want, and then you're allowed to, it's not going to affect your credit that much. It's a very small pull on your credit score. So
cool. All right. So what you need to know about credit scores and home buying, it's really about having a good rate. And to get that good rate, you have to have a good credit score. There are loan programs essentially for people with lower credit scores. I personally had a great credit score. I was on an FHA loan when I got a divorce, and I did a back to work loan program because I had gone back to the workforce for the first time in 12 years. So there's programs for everyone. You got to have the right loan officer to find the right one for you, and be creative.
Yeah. Just go out there and don't be afraid of the process. We always say fear is false evidence appearing real here. So go out there and learn the facts, remove the fear for yourself, and just know that hey, even if you think you can't, don't disqualify yourself from the homeownership. That's what a lot of people do. They go, well, I just can't afford it. Well, how do you know? Have you tried yet? Have you talked to someone that's in that industry and then actually knows their stuff, and they can look at your situation?
Sometimes you talk to more than one person, right? I mean, it's not always one. You might get to one that doesn't know, and you don't know that they don't know, or
make sure that whoever you're talking to is actually an expert in that field and not just someone that just either got started or just doesn't know what they're doing. And because there's 80-20 rule out there, right? There's a bunch of people that just don't know what they're doing. So
thanks so much for watching, and as always, we're here to bring you real life experiences to all your real estate needs.